Wow, YouTube is still very glitchy. Hope it's working. All right, we got some news coming up soon. Our watch parties start tomorrow. Make sure you sign up. Pay what you want, bro. Pay what you want. Some people contributed $10. Some people contributed $100. Somewhere in between for most. Pay what you want. Pay what you can. Whatever. Let me reload on the coffee and then we'll go, huh? Yeah! All right, turn me up, turn me up. Here we go. Joy and pain, sunshine and the wane. Yeah, good morning, everybody. I'm smoking hot like fire. When I turn, you desire. I'm fresher than you because you white. I ain't lying. I ain't dying up to number one and where I'm flying. All right. So, hey, I think we got Canadian GDP. Yep. Just a big heads up. Tomorrow we're starting the process of going through the monetary policy course together as a group live. And then at the end of the course, I'm going to do an updated lecture on the new framework that the Fed uses. They don't use the old framework. And in fact, Powell on Friday is speaking about the Fed's new framework at Jackson Hole. Well, isn't that special? Yeah, that's kind of cool, isn't it? So anyways, sign up for that. Like I said, pay what you want. Yeah, pay what you want. That's a fair price. Cool. So that starts tomorrow. Bring your lunch, bring your dinner. Cool. And let's do a headline update. We'll go to our Squawk Box headline radar.
U.S. Treasuries Besant. Fed rate cut could facilitate a pickup in home building.
Crypto market downturn persists as Bitcoin, Ethereum, and XRP test key supports.
Trump. Hope Putin will be good? If not, a rough situation. Forex technicals. The U.S. dollar is lower versus the major currencies to kickstart the U.S. day.
Gold consolidates amid easing yields, soft U.S. dollar, and geopolitical caution.
Canada CPI projected to remain below target in July amid inflation risks from U.S. tariffs. Bay Street may open, on a slightly positive note.
Wooden Church sets off on slow Swedish road trip to escape mining subsidence. SWI price forecast. SWI slips below key support. Momentum indicator hints deeper correction.
US Besant. I believe there will be meeting between Putin and Zelensky.
Cool. 10 minutes away from Canadian CPI. Boom. Yeah. CPI, bro. Very cool. So we'll take a look at that. And they expected even lower, and I understand why, and I'm not disagreeing with it. But one of the things we talked about earlier today in TRADARS and even on Sunday at TRADARS is that this headline number is good. There's no doubt. But the way they're achieving it is not good. Yeah. Yeah. So you have to get that from Stats Canada. But one of the things we do on Sunday is actually download and read these economic reports. So we go to Stats Canada all the time. We go to Eurostats all the time. We go to the central bank websites like RBNZ, RBA, all the time. ECB, Bank of England, all the time. We actually read their reports. Okay. S&P 500, what's my analysis? Well, you should know seasonally if it's up or down. So I can answer it that way. But I actually answered that question over the course of 90 minutes in our third quarter outlook. And I broke it down. So I can just tell you, but you're not going to listen anyways. You're like, that's not fair. Well, look, I took the effort to prepare a 90-minute speech that answered that question. Yeah. And so, like, I'm shocked you don't know. But free live stream is probably not the right place because I don't have 90 minutes. We have Canadian CPI. And you should have a bias on Canadian CPI and stuff. And that's what I'm trying to say is on Sundays, we actually download and read these reports. And if you look at the subcomponents of Canadian CPI, you would know the vulnerability that that is, even though the headline does not suggest that vulnerability. Huh. Huh. Whoa. And that means you know the truth. Yeah. Also, a thing that I've been making a big stink out recently is I'm very, very interested in the U.S. real estate data. Okay, so building permits and housing starts predict the future. So if you're applying for a permit to build a house, when do you build the house? And then even if you get a permit, if the bank doesn't give you the loan or if the economic conditions change, doesn't mean you actually start pouring your foundation. So what if you get the permit but you don't start? What if you don't even apply for a permit? What does that suggest for the future for new housing? Well, there is no future for new housing if no one's going to build it. And how come nobody wants to build it? Because there are plenty of people in the United States of America that make a living building houses for people. All right. So, anyways, 4 minutes, 4 minutes. Yeah. So, how is Canada doing? We're updating our CPI tool because it's not very good. If you don't mind me critiquing myself. So this is going through a radical update, but this is Canadian inflation right there. Yeah. All right. So here's Canada. Okay, 1.9. And the thought is 1.7. Okay, that's fine. And that's compared to everybody else. So the UK is still 3.5. New Zealand, United States below 3. Australia around 2. Europe around 2. But Canada below 2 and falling. Japan has high inflation and they need to raise interest rates. Yeah, interesting. Yeah. But how does this impact the economy? So you can, this is much better, this tool, right? And if we go to Canada, isn't this nice? There's Canada's GDP, and it's not looking too good. Oh, but inflation's low. Yeah, but probably for all the wrong reasons. And like I was saying, if you look at the subcomponents, it has nothing to do with proper management by the central bank or the central government. So if the global conditions were opposite, Canada would be crushed. Well, the global situation is what it is, and it just happens to be okay for Canada. Well, that's not good management. And that's what we're looking
US
at. Should we
Treasuries
invest?
investment. Fed rate cut.
Should we invest into Canada? Is Canada running itself well? right? We have to do comparative analysis, don't we? So if you were going to build a factory on Hispaniola, I think is Hispaniola, the island of Hispaniola, which country would you like to build this factory? The Dominican Republic or Haiti? It's the same island. Demographics are different, economic situation is different, political situation is different. So you have to compare and contrast. Where's the better place to invest? This is why we want to break all this data down. So Canada looks like it's winning the race on inflation, but if it's because nobody ain't got no money, that's a problem. If instead it is good government policy, well, then that would be good. If it has nothing to do with Canada and it just happens to be the situation, well, once again, you have to take that account. No, it's global. Oil is global. But high and low WTI prices, yes, would more correlate with Canada. But they're so correlated. The difference between WTI and Brent is just the spread, but the correlation is nearly 1-for-1. So, yeah. Here we go. This is the number we want to see. Yep, and they got it. 1.7. Yeah, so on Sunday, I will download and read this report to you. We're going to have milk and cookies. It's going to be great. So if you want to download, or if you want me to download and read the report to you Sunday night as you're preparing for your week, all members of TRADARS have access to that meeting and the recording. You should join us. Well, inflation comes from money supply. M2, well, you can do M2 versus M1 or whatever, but yeah. Yeah. Yeah, that's fair, but like if there wasn't any money, then wages would be low. So you're saying money, M2 money supply and wages. Okay, now I'm being very specific. No, but there are two things that will push a price up, right? Inflation. What is inflation? Low value of money. How do you lower the value of money? You you print a lot of it. Okay? That's the second thing is scarcity. Everybody wants something. What's the new thing that everyone's after? Labubu or something? Yeah, if you want a Labubu, is that how you say it? I don't even know. Sorry. Uh yeah, Labubu on eBay. Labubu. La Labubu is a line of collectible designer plush toy monster elves. Good. All right. I didn't even spell it properly. Yeah. But anyways, so if everybody wants a Labubu, but you go to Target and there's only 5 Labubus, you're going to have to beat up the other moms. Thank you for catching that, Jim. Thank you. And so, yes, shortage typically pushes up price or violent crime. You either bribe somebody. Canadian headline CPI rose by 1.7% year over year in July.
Euro pound holds firm as markets eye Eurozone, UK CPI, and Lagarde's remarks. Oil prices fall as Ukraine talks raise prospect of sanctions easing.
Canada Consumer Price Index, MOM, below forecast, 0.4% in July, actual, 0 point up. Canada CPI for July, 0.3% versus 0 point estimate. Year on year, 1.7% versus 1% expected.
United States building permits, MOM, below expectations, 1.39 mem in July, actual, 1.354 mem. United States building permits change fell from previous 0.2% to 2.8% in July. U.S. July housing starts 1.428 meter versus 1.290 meter expected. Oil prices fall as optimism over Ukraine peace rises.
Okay, all those headlines just came out in the last couple minutes. It's not the update. The update happens at 8:45. All of this just came out. So you don't even have to take your eyes off the charts and you can be updated, which is great. Now, here's the interesting thing. Here's the difference between, knowing the truth versus a false reality. So here's one.
Oil prices fall as Ukraine talks raise prospect of sanctions easing.
Here's another one.
Oil prices fall as optimism over Ukraine peace rises.
Okay, that makes sense, doesn't it? The war in the Ukraine, between Russia and the Ukraine, and the United States eases sanctions. Oil supplies go up, and the value of price goes down. Okay, that makes sense. Except, even without that data, oil would be falling. So this is just whatever noise, not necessarily the action. So yes, all of that is true and it makes sense, but you should have been a bear starting June 1st. In fact, we could probably get even more specific than that. Now, in our mind, based on seasonality, we know the peak is June 1st, but by July-ish, we should be bearish, right? So let's take a look at the past performance. Okay. I guess we can just start here. So here's August 1st. August 1st, we rolled over and became bearish. And now they're saying it's bearish because of something, right? What's up, Ronnie? Let me go May 1st, because in our mind, June 1st is a peak. Isn't it? All right. So somewhere between June and July, we believe there's a peak, and then we take it south, right? Now, can anybody concur? How many? Can somebody confirm that that's what I teach? Somewhere between June and July, we expect a top in oil prices. And from there, we're bearish. Because if we don't have that confirmed, then you don't know to be a bull or a bear. Now, I even recall that while this was going up, I still was a bear. Thank you, Jim. Anybody else confirm? Even when this was going up, I'm like, I'm a bear. Thank you, Jim. 100% of Jims agree. So even while this is going up, I'm a bear. Now, how can you be a bear if price is going up? Well, I'm not selling it as it rises, but I expect it to fall, and that's where you use technical analysis. Okay, more confirmations. Thank you. And so when you look at your charts, and let's say you found this to be a key reversal zone around 75 bucks, and now you're on a small time frame, and if you see a pattern that looks like this, it's bearish. But the thing is, seasonality tells you to continue to be bearish even when price rises. Okay? And so now oil's down. This is my point. You ready? We are at 75, and the media was telling you all the reasons why oil should go up. Then we dropped. Then we tested. Okay, this is 75. This is 70. Once again, on the way up, I said I'm still a bear. I'm still a bear. So you should be looking at your charts for resistance. Okay, and now that we're at 62, so let's just call it 60, the media is like, oh, let me tell you all the reasons why it's going to fall. Well, a little late. Yeah, well, what they're doing is looking around, they're looking at today's situation and trying to explain their observation. Clearly, the sky is falling. Well, did you know when we were closer to this price, even the U.S. government said oil prices are expected to fall? In fact, fall to 50. $45, I think it actually said. Let me revise that. Yeah, fall to 45. So the headlines impact sentiment for sure, but fundamentals are the reality. Did anybody read the EIA report that said the U.S. government expects WTI to drop to 45 bucks? I read it. And I think I might have read it at the week on the street, even though it is not a normal government report that we review. But I read it, and I'm like, dude, you need to know this. Now, the question is, did you read it? The second thing is, if you read it, you understand what variables the U.S. government is using for their price outlook. And so now if you know the variables and the rationale, I think that makes you smart. And everyone else is not. It's free public data. Yeah. Yeah. Speak about free public data. Um, the likelihood of the Bank of England cutting interest rates is diminished or has diminished. Hmm. It's public information. Okay. All you have to do is analyze short-term treasuries and compare it to policy rate. Do some math and then calculate the probability of a central bank cut by millions of contracts. Okay, the information is public. Anybody can do the calculation whenever they want. Most people don't know how to do it, right? So one of the things I am working on for us at traders.com is the automation of those calculations for every major central bank in the world, and done hourly, because it doesn't have to be, it can be daily. But I don't know how often I have access to the data. Depends on, see, every calculation has to be done individually. And some of the variables have to change because Australia doesn't have some of these assets. New Zealand has a different asset. What do you use for Europe? Do you use Dutch treasuries? Do you use German treasuries? I'm going to use Eurobor. And so they're all different data, and you have to gather it all, and hopefully it tells you the information you want to know, like give you the real juice of, do institutional investors or all investors, what do they think the ECB is going to do? And by think, I don't mean how do they feel, but how are they investing their money, and to be able to track that. Okay. So you like trading oil? Yeah, oil's a great one. Okay. So we're bearish on oil, and check it out. It should keep falling. Then there's a false rally coming. But once again, you should know all of this. Did you read the EIA report? Right? Okay. Brent crude oil prices in our forecast declined significantly in the coming months, falling to $71 a barrel in July to $58 a barrel on average in the fourth quarter of 2025, and around $50 a barrel in early 2026. It's just like, dude, if you guys don't know this, like, what are you doing? This is what we do at TRADARS. We've known this for days and days and days and days, right? We just pull it up like that. And of course, one of the things I'm going to do is I'm going to build an energy complex dashboard for us. But it's like, you either know or you don't know. You're either informed or you're uninformed, right? So, like, that's information. That's real information. That's the U.S. government analyzing on your behalf and telling you what they think the future is. Is that useful information? I don't know. That's a question for you to know. But we cover stuff like this all the time. Yeah. Okay. And then we carry it out on our charts, right? So when we go to, where should I guess commodities, right? We'll go to that chart. Okay. There's our trade plan. Yeah. Okay. Do you know what this vertical line is? The day we became bearish. Now, that doesn't mean sell. It means you look for challenges of resistance and then a response to that. This is the central pivot point. It's also $75 a barrel. Okay. Cool, right? So let's put this into focus. You ready? This is how you should trade, guys. You ready? This vertical line is the day we become bullish. Do you buy it? No, but if it had bounced here, maybe. But we know what pivot point theory is, right? All right, so let's now incorporate technical analysis, because the vertical lines, this is the day we become bullish, this is the day we become bearish. Simple. All right, great. Check this out. That top predicts this bottom. Notice that it occurs almost precisely on the day we're interested in becoming bullish. Okay? And it double bottoms there. Cool. Now, this gets us to this double bottom. This double bottom occurs early in the training course. It says if you have this pattern, okay, in the training course that I probably recorded 8 years ago, it's still relevant. Don't worry about it being old. Because it says if this occurs and then this occurs, we'll probably go back to the central pivot point. Can anybody confirm that? That they know that to be truth? Can anybody confirm that's how they think about trading pivot points? They're like, yeah, everybody knows that. Okay. Do the treasury markets impact the Forex? 100%. So we got lots of people. They're confirming this. So this is just basic facts. That this to this, and then that to that. Okay, great. But also, I want to bring your attention back to seasonality. Seasonality says we don't know what price will be, but right around there is when we become bullish. And right around here is where we become bearish. oh my God, that lines up like perfect. I know. In the coming weeks, there's going to be a false rally. Okay. How do we know? Well, we don't know, but that would be normal. But right now, it's pretty abnormal for the government to say oil prices are going to come down. But when we were way up here at 3, I specifically talked about it being the policy of the Trump administration. And that it, I think even going back to early in the year, like up near 1, we were talking about the war in Ukraine and that lowering oil prices, first of all, achieves Trump's agenda of fixing inflation, aka fixing inflation. He needs inflation down for the Fed to cut. And he wants the Fed to cut. So he wants oil prices down. Plus, we have to refill our strategic petroleum reserve. So we need oil prices down for that. But also to force Russia into a resolution, we need low oil prices. And then I said, you know, the war in the Ukraine is one issue. The second issue is the war between Iran and Israel. And that there'd be a resolution to that, which would then bring oil prices down further. And I'm like, we covered all that in January. And so now here we are here, and you're reading in the newspaper, it's because of something that happened today or yesterday. Oh, it's because of something else. Like, really? Where were you here? Where were you here? You got to be careful because the media after this says up. And then the media after that says down. And then the media after this says up. But I'm like, no. It's been up. So they're always going to look around the world and say, prices are down and something just happened. They must be related. Well, that is likely only partially true. So if in the future there's a false rally, the media is going to tell you it's because Putin doesn't look like he wants to end the war against Ukraine, and that they're going to fight all winter. And they're going to say, oh my God, it's Putin. And then we'll get this by the end of the year, and then it's some other thing. So I want to ensure that you know. Okay? Veritas is the truth through knowledge. This is where the concept of Illuminati comes from. You are knowledgeable. You're illuminated because you know the truth, and the truth is from knowledge. And TRADARS brings you that truth. Okay? Oil prices came down. Oh, really? You see? Yeah, I know. And then we're going to have a false rally. Oh, great. Great. Is it happening now? No. But if this normally happens, okay, if it normally happens, then maybe it has nothing to do with the war in Ukraine. Maybe it just is. So there's our false rally in greater detail. Okay, somewhere around, somewhere between August and September, we bottom out a little bit and we rise and then we fall a little bit. So now every year is different. I'm not telling you, right? I'm not telling you it predicts the future, but what I'm saying is the fact we went from here to here is normal and maybe had nothing to do with geopolitics. Remember that April 1st vertical line I had on the chart? It basically said, look to buy oil. Look what happened. But we knew that way before it occurred, months before it occurred. And then the down. Well, what have I said even just today 10 times? Somewhere between June and July. Somewhere in here, we top out. Oh, look at that. We topped out and fell. That's amazing. No, it's not. No, it's not. It's only amazing if you don't know. No, it's not. Okay. So, false rally. Okay. And then a little drop. And then a false rally. And then a big drop. And then a real rally. And then we top out. Cool. Cool. Great. Yeah, Don, that's the risk. I think what Don is saying here is Powell says they're not going to cut interest rates. Yeah, that's the risk. Okay. Where do you find out about oil news and supply? You need to join. Look, I think we've gone over this. Like, I don't think you have cash flow for, but um, go to Investor Bootcamp. It's $88. I hope you have $88. I think you do. Great. And then let me show you. This is important. Like, this is true advice. Just confirming that I put it here. It should be a game changer. There we go. Okay, it's a minimum. Most of these are more than an hour long. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's somewhere between 11 and 15 hours of education on trading the oil complex. I would start there. So where do you get fundamentals about oil? How about the Energy Information Agency? Okay, the EIA. What about the IEA? Okay, let me show you like how straightforward this is, right? EIA.gov, IEA. I'll show you this one. Okay, there's the other source. Okay. Okay, here's another one. And go through all the other ones, but read they do outlooks, they do annual reports, they, right? Um, oh, that's funny. It brings up this one. That's not the one I wanted, though. Oh, well, let's just do this. get a little more specific. Okay. And they do a lot of data because for here, you want to look at GDP, but commodity markets outlook, maybe read that. Okay. There's another one. You want to look at their World Economic Report. Research. Here it is. Did you read this? And we'll do economic. Okay. And you should be able to, like, productivity indicators and all that kind of stuff, like global GDP. Anyways, there's lots of data in here. You can go straight to the, right? There's this data, there's GDP growth data. You can go country by country, you can go global GDP. But all this should be straightforward. Now, most of this we already incorporate into our tools. So everyone that uses TRADARS already has all that information. But the second thing is I'm building additional tools that tie into this. Like this OECD, we actually tie into this database. Isn't that cool? So you already have that access, right? So where do you get oil supply news? You're asking the right question, but you're showing that you haven't taken the energy course. Now, why not? Like, you should know, if you're going to trade oil, you should know all of this data. Look at this, the oil history from 1850 to today. The geology of oil and gas, how to drill oil, how to frack oil. Heavy, right? Heavy oil out of Fort McMurray. How do they get the sand out of the oil? Okay. Legal contracts. How to sell gasoline. Like, so look, you're asking the right question, but dude, take the course. Because you can see, like, I know it, and I'm like, dude, here's 10 websites. Boom, 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 boom. But you know, I took an entire Harvard class, a 15-week class on the oil industry. This is how come I know all this stuff. So I spent, for that class, let's call it $5,500. I imagine for the one class, I spent 5,000 or 6,000. Okay, for the one class. My professor had a PhD from Oxford. She was Russian. So she knew everything about the Russian oil industry and has the PhD from Oxford, so knows everything about oil in general. And she made me write, let's see, 15 weeks plus 17 papers. So how do I know to do all this stuff? Like, how do you know to go to IMF? How do you know to go to this so quickly? How do you know all that? I'm educated. Not only did I take the class, I wrote the class. So I'd say pay the $88. I'm like, seriously, you're asking good questions, but they're, yeah, yeah, yeah. Take the class, because there's no way you're going to compete. You're asking the right questions, but there's no way you're going to compete with somebody that knows all of this and already does all of that. There's just no way you're competitive, right? So I would get pissed off and get competitive. Don't get mad at Wayne like, oh, he's just doing this to sell me an $88 course. Really? No, by the way, it's not an $88 course. It's for all the courses. So you can't believe I'm doing this for the $88. Really? Wow. Somebody's scarred, huh? You've been burned by a bunch of gurus? Yeah, well, that scar tissue's thick, my friend. You should look at this and go, I need to know how to drill for oil. Have you ever wondered about how to frack? Look at this. It's an hour and a half. It's this big. You get this much stones. I mean, it wouldn't even pay for coffee that morning for the crew, right? So they just didn't do anything about it, but they knew this rock, this shale, and I got some shale right here. I got shale, baby. I got it for you. Yeah, I love doing this course. Pause. I'm not sure why I lost sound. We can't get enough out to even pay for the that's too bad. What I was showing you is I actually had some shale. Cares, right? Well, when oil prices double and triple, suddenly everybody cares. So they want to do anything, whatever it takes, get hydrocarbons out, right? So anyway, so that's what we're going to talk about today. Okay, so once a reservoir, in this case shale rock, is found, you got to drill a hole all the way down. We know this. Now, one of the things you're going to hear about when you're looking at the negatives of fracking, there's a lot of concerns about contaminating the water supply, right? The water reservoirs. These are usually 1,000 feet or less below the surface. But you got to remember, we're going to drill 8,000 meters. Let's just say 25,000 feet below. And so in the beginning, we need to go right through that, and we want to protect it. And the process does protect it. But it's so crazy. That shale is so crazy below our feet. It's so far. It's unbelievable. If we're worried about the contaminating the water, it's way, 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 way below the water table. It's crazy. Again, to see how deep we're drilling is truly unbelievable. It's like sending people to the moon. It's unbelievable what we can do. So, as a review of the process here, we're drilling down and we get to that water table, let's say about 1,000 feet down. Okay, we're using that mud. Remember the drilling mud? So as we're drilling, we're filling the hole. which is another way of saying we're keeping the pressure high. So mud is coming down and then coming out. So remember, it comes down and then out the drill head, okay? Filling the hole because the drill head is wider than the drill, like, dude, what a good course. Like, I get detailed, man. Right? I get detailed. Yeah. I mean, seriously, huh? In a heater treater. And try to separate the oil, the gas, the water, and the sand. Now, you've been through that process in conventional, right? In the conventional lecture. And so you kind of understand that. It's very intensive with water, and we'll talk about that because this is really thick stuff. So you have to add a lot of water. Then you put it through this process and you separate everything out. But when you remove the water, and this goes back to Maida's question, like, well, why are people against these unconventional processes? That water becomes so contaminated that you can't even clean it. It's almost like, what's wrong with nuclear power? Well, you have like radioactive water. That's one. And then you have radioactive, material at the end that will take 1 million years to cool down. You're like, okay, that is a problem. So imagine water so chemically dirty that there isn't currently technology to clean it. And it takes a lot of water. Yeah, I want to do this course again.
Try mixing our oil sand sample with a little bit of hot water.
Yeah, we do. It's not pure
trips.
carbon. There's a lot of other stuff in there.
Anyways, how cool is that, man? I want to do that course again. So, hey, dude, seriously, just take the course. I can't imagine a world in which there's a better course on oil than that course. And if there was a world of competing oil courses for traders, and I only gave you that one course, and I charged you $88, not only would it be the best course, it'd be the cheapest course. But on top of that, you get all the other courses. Like, dude, it's so dumb if you think I'm doing this so I can get your $88 and get rich and drive a yellow Lamborghini and have a yacht full of girls in bikinis. You're like, what? Dude, what? Just take the course. Just take the course. Like, come on, man. Don't be so jaded. All right. So anyways, we got a stock market opening soon. Are you guys ready to do the Fast and the Furious? I'll tell you what, give me 30 seconds to reload my coffee, and then we'll do the Fast and the Furious, where we go through the US dollar, right? We'll look at euro dollar, we'll look at gold, we'll look at Bitcoin, we'll look at the treasury market, we'll look at the S&P 500, and then if you remind me, we'll do a viewer's choice. How does that smell? Give me 30 seconds to reload the coffee, and then we'll do the Fast and Furious Forex. Boom! Oh, you know what? We should have some nice background music, even though it's only 30 seconds. Maybe it's 42 seconds. You never know, right? Here we go. All right. You guys ready? Boy, YouTube is really lagging today. YouTube's had problems recently. All right, let's just cut the music. Why even fade it? I'm fade to black. Dust to dust. Now, how does it go? Ash to ash, dust to dust, fade to black. But the memory remains. Da, 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 da. You ready for your macro? Bum, bum, ba, da, 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 da. Look, nothing's changing in the last hour. Yeah, oil still around, still below 63. Yields are still too high. S&P 500 waiting to do something in the market open here. Bitcoin still around $115. Still around 98. So not a lot has happened recently. Dollar weakness across the board. Yeah, hot to go HOTTOGO. All right, so what do you think about that euro dollar, huh? What do you stink? Well, let's take a look at all time frame. Check it out. 15-minute. Slightly shows weakness with an opportunity. Hourly shows, well, inverse head and shoulders. I don't think I'd call it that if I were me, but I guess you could. Inverse head and shoulders means up, but this says down. This says up. So down and then to the moving average and then up and then 4-hour descendant down. Skip it, man. It's not very good. Huh? Look at that. Is there an underlying intrinsic trend? See, I'm a macroeconomic trend trader. When it says sideways, up, down, you know what it means? Find something to better do with your money, huh? What about Bitcoin? What's going on? Is it moving up, down, or sideways? Well, let's take a look. Looking at all time frames, Bitcoin shows a falling wedge on the hourly chart. It's slowing down as we enter the apex. So it's showing weakness and probably really consolidation. Maybe can fall a little lower to 113-ish. But once again, mediocrity. Be careful. These markets are not amazing looking at these. Now, remember, I'm only showing you on the YouTube channel just the biggest, most common things to be trading. But I've already spent an hour going through all the fundamentals and technicals, and there are plenty of things to be trading. Yeah. But I'm just showing you if you're going to trade Bitcoin right now, you got to, there's not a lot going on. And you should at least know that. For example, if we look at the 10-year T-note, which shows us the risk on, risk off, and direction of dollar, and if we look at a 15-minute chart, 30-minute chart, hourly chart, 4-hour chart, daily chart, and we look for trending patterns and reversal patterns, guess what? There's none. They don't exist. So you might be watching the charts, but there's no reliable, repeatable pattern going on. Yeah. So vulnerability. Once again, should you be over trading today? No. What about gold? There's a lot of news and noise about gold. Is it good? Is it bad? Is it ugly? Is it up? Is it down? Is it sideways? Check this out. Triangle, consolidation, non-directional. Pennant, probably downside, especially if we breach this. Okay? Fall, consolidation, fall. It's like a three-wave correction just on a different time frame. So this is probably a three-wave correction on a 1 hour or 4 hour, but here it's down, pennant, down. Pennant just kind of being like an inverse flat. And then falling wedge down, but up, so the moving average or the top of the line is your opportunity to the downside. So down, down, down. Huh? Down, down, down. Put that on your to-do list. Maybe today you see some down. Well, what if you're fundamentally bullish? Oh, well, maybe not today. That's all. It's okay. How about the stock market? Do you like the stock market? Well, if we're looking at all trends, up, down, and sideways, and all reversal patterns, and we're going to look at specifically the S&P 500, and then we're going to look for all of those trends and patterns on 5 different time frames, guess what? There are none. S&P 500, right this second, isn't a great opportunity to be trading. Well, maybe later today things change, and most likely you'd see the change on 15-minute and 30-minute charts. So maybe that change, like when things hit this technical radar, if you're a bull and suddenly you get bullish patterns forming on a 15-minute or 30-minute or hourly, boom, boom, boom. Now, Richard says leaning towards risk off. Maybe. Maybe, not necessarily. Because neutral is neutral. So you can't say neutral means risk off. Neutral is neutral. Okay? Okay, neutral is neutral. I'll show you, I'll give you a greater detail of what we're talking about here. And again, all of this is so easy with TRADARS to visually take all this complex data. It's so easy. Okay, check it out. Long term, we're bullish. Short term, we're mixed. How do I know? Well, we look at 3 different time frames, and we look at short-term yields, the yen, gold, volatility, the entire options trading market, the stock market, the dollar, and long-term treasuries, and we look at how they're trading and how they correlate, and guess what? Generally speaking, we're risk on, just not today. Not now. Not this week. We're waiting for something. I don't know. Maybe everybody's on holiday. Maybe it's Jackson Hole. Maybe it's the Russians and the Chinese and the Iranians and the Houthi mamas. Are you worried about the Hoochie mamas? But it's like, dude, are you trading aggressively today? So I just looked at this and said, look, nothing reliable and repeatable is happening right here, analyzing today and this week. But I also just went through the dollar and the treasury market and Bitcoin and gold and the stock market doing pattern recognition, which is 100% technical. None of this is technical. This is 100% fundamental. But I just went through our technical radars, and what did they tell us? Now's not a great time. Okay? No, Don, but that's why I'm here, Don, and I go through that in great detail. Okay? That's what I do on a regular basis. I do that every morning. So every morning I focus primarily on fundamentals. Every afternoon I focus primarily on day trading. So on, like today is Tuesday, so tonight at 4, this afternoon at 4, when the U.S. stock market closes, I get together with the group and we plan Wednesday's trades. On Thursdays, I do swing trading. On Sunday, I read fundamentals, but from a different point of view, reading the report and then discussing what I see as an economist. So it's like right? Right? I constantly talk about that, right, Don? And so one of the big things I've been talking about the last few days is, I think what most people agree is that we've shifted from a focus on inflation to the job market, and that's what the media is talking about. But what I'm talking about now is I've already moved on from that because we've already known that for 6 months. So now it's happening. Got it. So that's what the media wants to talk about. But I think we've already moved on. And now I'm most interested in the real estate market. Now, why am I interested in the real estate market? Because it'll be what the media will be talking about 6 months from now. Right? And that's my role as your chief economist for your trading firm. I see that every single one of you are small, independent, yet institutional traders. You're not an amateur retail trader anymore. I'm going to fix you. You are going to trade as an institutional trader. It doesn't mean you won't scalp. You'll scalp, spot, swing, position, and carry. But every single trade you make will be logical and intelligent, based on quantitative analysis of everything from what all these constituencies are doing to how the media is writing articles. Like, again, let's do this. It's so great. Check this out. We use AI to read hundreds of articles and then quantify what the media is writing about. Okay. Oh, yeah. I had some issues with this one earlier. See, we're going through a lot of upgrades and something glitched, and now it's not even loading. Interesting. Oh, this one loads. So it's that one. But anyways, here's the bottom line. You're going to trade like a professional. Every trade you make will make sense. Now, maybe it won't make dollars, but it'll make sense. And you will think a day ahead, a week ahead, a month ahead, a quarter ahead. Everything will be based on your analytical and quantitative analysis of now and the near future. Now, it's $200 a month, and that probably is too much for many of you. Now, I think if you have any money at all, $200 is cheap because you're probably losing $1,000 a month trading. So if you're losing $1,000 a month trading, why don't you at least invest 200 of that into something that actually gives you some value? And maybe with the performance coaching, we can turn that around. But, and there's a big but, I'm starting a new service called TRADARS Mobile, and it's only $1 a day. And it'll give you soon much of what is here. Not everything, but much. Yeah. And I'll give you the link to that because it's even on sale. So it's even less than $1 a day. And you could probably survive with just this. Here it is. I think it linked. I think it has Maybe it's not on sale anymore. Hang on. Let me just. I'm just the boss. I don't know. Don't think it's on sale. But here's the thing. The idea is that we have a standalone version of TRADARS. So if you don't have $200 a month, at the very least, you can have the mobile version, which gives you much of what we have on the full desktop platform. But you'll get some of it like this, and you'll still have some scatter plot, but you won't be able to zoom in. It's just technically not possible. And you'll have all the individual scorecards, but you'll get the COT emailed to you. You'll get score flips emailed to you. Okay, here's more score flips, pre-market to tell you what to do. You'll get technical setups emailed to you. So like, I can't display the COT to you on it's too complicated. Okay, it's just too complicated to put on a phone. But I can email you. And there it is. There's your COT report. So for $1 a day, that's per year, guys, per year. At least you can stay in contact with what's happening. So some of these things come to you on a regular basis, like every morning at 6 a.m. It gives you an update. But some of these things are real time. And I realized actually one of the things it's going to email you isn't even here. Ha! It gives you more than this. The correlated. So one of the things that this TRADARS mobile service is doing is it's looking for the pattern recognition. So it's the radars. Okay. Well, I guess really it's more over. It's over here. It uses the scalping radar, not the ones that are forming, but the ones that are in play. Let it load. Remember, it's a database. So check this out. And it's so funny because it's not even promoted. All right. It's going to look for overlaps. It's going to look for USD Swiss franc on 5 time frames, USD Rand on 5 time frames, Kiwi CAD, Kiwi Swissy, CAD Swissy, Aussie. It's going to look at all the pairs on 5 time frames. So that's thousands of charts, and it's charts with potential patterns. And it's looking for the same currency pair with different patterns, but that say the same thing. So to say in English, what if the 4-hour, the 1 hour, and 15-minute USD Swiss franc all said long or bullish or up or whatever, risk on? You'd be instantly emailed. Yeah. That's part of that service for $300 a year. Let's see, do I even have email open? I don't even do I thought I had it open. Because, yeah, I do. I got like 3 of these correlated alerts just overnight. So let's see, I got a market open alert. So oh, here's one. now for some reason I have an old version of my email, but anyways, um, here's an example. This would be emailed to you as soon as it happens. So back then, and this is an old one. This is 4 days ago, but whatever. So it comes out as soon as it happens. At 8:57, this happened. Okay, these two patterns. Okay, they're both showing at least 20 pip opportunities, both in the same direction. Forecast of 81 pips to the downside, and its confidence level is 67.26. There's the price, there's the forecast, there's the pattern, and sometimes it's three patterns, which would up the confidence level, wouldn't it? And they have to occur at the same time, or nearly the same. So going back to what I was saying, okay, that's $1 a day. So you're walking down the street, it's Friday afternoon, you're on your way to the pub, you get an email, and it says, hey man, the COT report just came out. Here's the most important information about it. Right? Wait, it's the next image, right? Hey, the COT report just came out. Boom! I don't think I can freeze it. No. So anyways, score flips, real time. This is pre-market open fundamental review, pre-market open technical overview, real-time score flips, real-time correlation review. And this is what we're building right now. The ability to log in on your phone to TRADARS. The problem is we have this giant database platform, much too sophisticated for your small browser. So I found a solution to that. I built an entirely different version of TRADARS. This is not the same thing. It's completely different. Okay? But these are real scores. This is live. These are real scores. This is live. This is a real scatter plot. This is the real markets. This is live. Now, this is glitchy, and we're working on it. And here's the cool thing. Okay, this is live. That's the real chart for USD CAD. That's the real bias. There's the real score. Now, again, it's a little glitchy where this says -2 and this says -1. That's all going to be tied in. This is just not counting one of the things here because we upgraded it. Okay, we upgraded this, but this didn't get upgraded yet. So we're in that process, but it's 99% working. And you're like, Wayne, I only trade pound Aussie. Cool. Well, that's what we think about pound Aussie. Score 4. This is a 4. But we're neutral because we want this score to be bigger than 4. So anyways, we're getting there. There's the seasonality. Here's the data. This is all working on your phone. This is live. Inflation in the UK, 3.6. Inflation in Australia, 2.1. But right? Inflation in Australia is falling. Inflation in the UK is rising. Retail sentiment is 85% short. Here's the institutional positioning. All on your phone. $1 a day. So it's one of these things like, if you can't afford the full thing, at the very least, stay close, stay in contact, stay updated. Stay knowledgeable. Be competitive. I can't make it cheaper. You understand how much this costs to build the whole entire system over again? And now to email you, it takes, is it 3 or is it 4? I think it's 4 different servers generate the emails and send them to you. And we have to tie everything together with duct tape. As far as you know, the COT report comes out, you're updated. Score flips come out, updated. Oh, the London market's about to open. Hey, you're updated fundamentally. Boom. Oh, look at all these technicals. Boom, this scalp just showed up. So I can't do it cheaper. It can't be done. Yeah. And it's my way of saying you have to have this. You have to have this. You have to have this. Yeah. So anyways, let me give you one last reminder about tomorrow. We start our watch parties tomorrow. You can pay whatever you want. It's fine. I don't care. Right? Buy me a beer, and that's that. Pay whatever you want. That starts tomorrow. And I think even tomorrow, I'm going to ask you guys if once a week is too slow. Maybe we do Tuesdays and Thursdays. And knock it out so we can move on.com to other things. I'm very open-minded. So look, I know it seems like a lot's going on, but a lot is going on. So I'm here for you. There are an amazing amount of resources. Yeah, I'll record them. Yes. Yeah. And so if you want more details like that, you have questions, I believe it's all discussed on the main landing page. So there's a lot going on, but these are all resources. You have training courses, right? 100 hours of training. Dude, it's $88. I mean, dude, can I make it any cheaper? No. Can I make it more expensive? It's worth $1,000. Should you be updated on the new way the Fed works? Jay Powell's doing an overview. He's teaching. Think about it. So Friday, he's doing a speech at Jackson Hole. It's not for the Fed. He has central bankers from all around the world. He's teaching them their new framework. It's literally in the title of his presentation. He's teaching the other central bankers the new Fed framework. I'm teaching you the new Fed framework. And most people don't even know yet. Most textbooks don't even have it there. The other central bankers don't really know how the Fed manages its policies. So Jay Powell says, well, this is a good opportunity for me to review the framework with the other central bankers. Oh my God. So look, and I say, look, pay whatever you want. I mean, come on. Maybe I should do that with the investor boot camp. $88 is so cheap and stupid. Maybe I should just say, you know what, just pay whatever. I don't care anymore. Just do it. If you're not going to do it. But then again, I wonder if you don't have $88, why are you a Forex trader? Are you going to get rich? Turn $50 into 50 million? I don't know. I would highly recommend paying the $88 and getting a job. 2 jobs. Work nights, work weekends, work 20 hours a day, 7 days a week. Dude, that's how the Silicon Valley was. When I worked in the nonprofit world, we worked 20 hours a day and I didn't even get paid. So yeah, work 3 jobs. Save your money, get educated, and then once you've bankrolled yourself and you have a little bit of capital and you have a lot of knowledge and expertise because you learned how to trade and you practiced on a demo and you saved your money, yeah, it's going to take blood, sweat, and tears for years. So what? Get over it. Who cares? Yeah. And then when you're ready, you'll be capitalized, and now you have a decent chance. So anyway, I'm trying to make it as easy for you to succeed as possible. And I hope you feel that way. That's it. Like, dude, I can't make it any easier for you. So, oh, wait, I can make it easier. I guess I can do that. Let me show you how much easier. You sign up for TRADARS, you pay for TRADARS. And check it out. You execute through us, aka you sign up to trade with us. You get an MT4 account. I'm going to set it up so you can download all my chart templates and load it into your MT4. So you'll have TRADARS, you'll have all our performance coaching, you'll have all my charts, you'll be using MT4 even if you're an American. And check it out. Every time you trade, you get some of your rebate given back to you. Every day at 5 p.m. at rollover, cash will be added into your cash account. Not a credit, not phony baloney money, cash into your account. So think of it this way. Your spread gets narrower. Every trade is cheaper. If you trade enough, I'll actually refund some of your TRADARS subscription fee. There are people in this room that don't have to pay anything. They pay the $200 up front, and then at the end of the month, I PayPal them $200 in cash to their PayPal account. Plus, they get the spread rebate. They don't pay anything. Would anybody like TRADARS? All the analytical tools and performance coaching, and it doesn't cost you anything? Well, see, I'm doing my part, I think, because I want every trade you make to be logical and intelligent. Peace on earth, may the pips be with you, may our profits be above average. I'll see you today at 4 o'clock, TRADARS.